While some online bullion dealers continue to charge almost $4 over spot for U.S. Mint Silver Eagles, SD Bullion is selling 2017 Silver Eagles for just $2.29 over spot on any quantity. Again, that's just $2.29 over spot for any quantity. If you haven't joined the over 40,000 precious metals investors by making the switch to SD Bullion, what are you waiting for? You could save hundreds or even thousands of dollars on your next order. SD Bullion, the lowest prices, period.
This is an economic collapse update from sgtreport.com. Friends, on March 30th, the CBO warned of a fiscal catastrophe as a result of exponential debt growth in the United States. And there are some very important facts in this report that I want to share, not the least of which is this one. According to the CBO, at 77% of gross domestic product, federal debt held by the public is now at its highest level since shortly after World War II. If current laws generally remained unchanged, the Congressional Budget Office projects growing budget deficits would boost that debt sharply over the next 30 years. It would reach 150% of GDP in 2047. My friends, if you think we're going to make it to 2047, then I have a deep discount I want to offer you on a bridge for sale in Atlanta. We will never make it to 2047 for a variety of reasons, not the least of which is, as a Ponzi scheme grows out of control, the dominoes fall at a more and more rapid pace. The CBO's troubling conclusion is that there is a greater chance of fiscal crisis. Well, I'll tell you what, not only is there a greater chance of fiscal crisis, countries like China are selling treasuries hand over fist. And as Daniel Moore from Seeking Alpha reported in January of 2017, U.S. treasuries owned by foreigners showed a decline of $335 billion from just June through November of 2016. Based on a review of the historical data dating back to 1967, there has never been selling pressure of this magnitude from foreign entities in the U.S. Treasury market. In fact, the closest comparable time period was November 99 through March 2000, when foreign ownership declined by $199 billion. The big difference between the two time periods is that foreign entities currently own over 42% of publicly traded U.S. debt, whereas in the year 2000 they owned only 30%. The U.S. publicly traded debt in March 2000 was also far less at $3.56 trillion versus $14.4 trillion today, a whopping four-fold increase in just 16 years. Again, friends, as a Ponzi scheme unravels, the dominoes fall more and more quickly. And if you want a great example of that, remember the Bernie Madoff scandal, in which the stock and securities fraud of Madoff were discovered in late 2008. But did you know that Bernie Madoff started his fund in 1960 as a penny stock trader with $5,000? Bernie Madoff was able to build his Ponzi scheme from 1960 to 2008. And the Ponzi scheme built by the U.S. government has been in place since at least 1970, when Nixon took us off the gold standard. And only in recent years have we seen the Ponzi scheme balloon as it has, with the debt more than doubling just during the presidency of Barack Obama. And friends, I want to show you a very interesting chart. It's the silver chart. Take a look at it, and before we discuss it, I want you to recall that Thomson Reuters and the CME Group have been controlling the execution of the daily silver price fix since August 14, 2014, from the London Silver Market Fixing Company. But on March 10th of this year, CME Group and Reuters have announced that they are backing out of the LBMA silver fix. The question is, why? Now back to that silver chart. As our friend Mike Maloney has reported in earnest, the silver shorts position is now the largest it has ever been in history.
If we go to silver, what you see now is it dropped and they increased their short position yet again, and now they're back to even with the greatest short position in history. So they are really betting that gold and silver are going to fall, and silver is going to fall a lot more than gold. which means that the gold-silver ratio is going back up into the 80s. I think it may even hit 100 again.
The commercials are shorting silver to a degree we've never seen before. And yet, if you look at this chart, silver just broke through resistance at 1808. Today on Friday, closing somewhere in the neighborhood of $18.18. Now, Mike Maloney is predicting at least a double bottom, with silver probably returning to its lows in the mid-13s or 14s as a result of this large silver short position. And that may well happen. But again, I want to remind everyone that the CME Group and Reuters is backing out of the LBMA silver fix. The question is, why? As every great Ponzi scheme unravels, the dominoes begin to fall faster and faster. You will recall the March 2nd Silver Slam, in which some unknown entity decided to unload over $2 billion in notional silver into the future pits, causing the price to plummet. Over 23,000 silver future contracts suddenly thrown into the market as soon as Europe closed. And what have we seen since? We've seen the price of silver rebound back into the 18s, and now it's breaking resistance. Now, we're not predicting that the commercials will find themselves trapped, but where there's smoke, there's fire, and as every great Ponzi scheme begins to collapse, the dominoes fall faster and faster. And with the CME Group and Reuters announcing that they're backing out of the LBMA silver fix, the global benchmark at the London Silver Fix, a global benchmark that has been in place for 117 years, we ask, why? The silver price we see today does not reflect any sort of reality at all. When valued in actual inflated U.S. dollars according to the U.S. debt clock alone, silver should be priced much closer to $800 or $900, perhaps even more than $1,000 an ounce. And friends, if those commercial shorts that hold the largest short position in the history of the silver market get trapped, then it becomes very, very easy to see how the Webbot prediction of $600 silver sometime this year in some form or fashion could occur. Thanks for watching, and for real news 24/7, visit us at sgtreport.com.